Hello everybody, I'm going to give you a quick demonstration on how to use a position sizing calculator on SafeTradeBinaryOptions.com. If you go to SafeTradeBinaryOptions.com, you can click on the Analytics and Position Sizing Calculator, and it'll bring up this tool that you can use to figure out the ideal position size for whatever asset you're entering, where you're putting your stop loss, and how much you're willing to risk. So let's go over an example here. We have your account size. This is how much you have in your account or how much of your trading capital that you're willing to use for trading. So let's say you just deposited $1,000 into your Forex account or your stock trading account or your CFD account. This is the amount that we can use to trade. Let's say we have a trade where we want to buy a stock or a CFD at $10 and there is a stop loss at $9. That's where you've decided to put your exit point. The stop loss is the point where we get out of the trade if we think we're wrong about the trade, or simply to cap our loss so that if the price keeps going against us, this controls the amount that we lose. So this is an example of a trade, and then the last step is to put in how much you're willing to risk of the account. So you can put it in money or percent. Professional traders are usually risking 2% or less of their account. Smaller accounts, some people risk a little bit more. So we could put in 1%, 2%, whatever you're comfortable with risking. And let's leave it at 2 for the moment. And you can see the position sizes and the amount of risk. So the first number we see up here in the top, the amount of the position. This is basically how much we're going to have to spend to take that trade, or how much capital we're going to be using up to take that position. The position size is how many shares we'll be buying, or if you were looking at Forex, how many lots or how many dollars you would have to spend. And risk is how much, if the trade were to hit our stop loss, how much are we going to lose? So $20 is simply 2% of 1,000. The position size, if we worked this backwards, we're entering at 10, we're buying 20 shares. If we lose on that trade and the price hits the stop loss, we will have lost $1 a share, right? We were getting in at 10, we're getting out at 9, we lost $1 per share. We had 20 shares. That perfectly equates to our risk. And that's what position sizing is all about, getting the optimal position size for the risk that we're willing to take and the trade setup we've decided to take, so our entry and our stop loss. The next step is that we can also input our target price. So we got in at 10, we're willing to get out at 9 if it doesn't go our way, but we can also put in a target here, and let's say we want to get out at $12. That'll give you the percentage of your profit. It'll show you how much your total return is, including the amount you invested. Remember, we're putting in $200 into this trade. We have 20 shares. If we sell them for a $2 profit, $2 times 20 is 40. That is our profit, so we will be profiting $40, and we'll also be getting back our original $200, so our total return, $240. So that's the very simple version of this, and then we can get a little bit more complex if we want. We can add in multiple profit targets. So here we have our first target. Let's keep it at 12. And then we're going to put in an allocation. How much of this position do we want to sell? Remember, we have 20 shares. So we could sell those shares in stages. We could sell some at 12, some at 15, some at 20. So this is how much of that position you want to sell as a percent. So we have 20 shares. A 50% allocation means you're going to be selling 10 of those shares. And then let's say we want to sell another 10 or 50% of our position at 14. So these numbers over here show our profit. If we entered at 10 and we're selling at 12, that's a $2 profit. We're selling half of our position, which is 10 shares. So 10 shares times $2, that gives us our profit on that sale of $20. If we sold the entire position right at that point, that's what this number is. And our position would be worth $240 which we'd already seen up here if we sold our entire position at 12. Then we want to sell another 10 shares at 14. We can calculate that out. We entered at 10, we're selling at 14. That's $4 times the 10 shares. Our profit on this portion of the position is $40. This is the total amount you would have received if you sold the entire position at 14, right? Because we're going to have 20 shares times a $4 profit. That would be $280. But we didn't sell it all at this price. So this is almost like a comparison. It shows you how much you would have made if you sold it all at that target. And then this is how much you would have actually made. And then at the bottom, you will get a sum of your total profit. So on the first part of the position, you sold 10 shares for a $2 profit to make 20. On this second portion, you sold 10 shares for a $4 profit to make 40. Your total profit is $60. You can do this as many times as you want. You can add in multiple targets by clicking this button. The only thing you have to do is make sure that these add up to 100. So you could put in to sell 20% here, 20% here, and then you'd have 60 remaining. So you'd have to put in 60 there and maybe sell that all at 15. So this can be worked multiple ways, multiple targets, just to see what your theoretical profit could be based on exiting at different levels. The last step is if we wanted to calculate leverage. Once we've clicked leverage, we can move down to the bottom of this and you'll see a leverage box here, and you can put in whatever you want. And what this is going to do is it's going to magnify the position size, the risk, the profit, everything by 10. And we'll talk about why that's good and why that's bad, and then also how to adjust to bring your original risk back. So we can see if we just magnify the position by 10, remember we were taking 20 shares originally, if we just up this to 200, our risk is going to increase by 10. So we are going to make $200, or we're going to be risking $200, and our profit's going to also increase by 10. So we'll be making $400. The problem with that is that we only wanted to risk $20 of our 1,000. Risking 200 of 1,000, that's 20% of our entire account. That's more risk than most people are comfortable taking. And that's what these other numbers are here for. So these show just what would happen if you increased your position size by 10. Okay, we make 400, but we're risking 200. If we want to bring this risk back down to $20, but still keep that larger position size magnified by 10, then we'd have to use the tight stop loss. And this is going to show you what the stop loss level would have to be to bring this risk back down to your original amount that you had put in at the top, which was we'd only be willing to risk $20 or a certain percentage of our account. So $9.90, keep that in mind. Our stop loss is down to 10. So let's go back up to the top here and see how that would have worked. So if we did take 10 times the position that it originally said here, we would have 200 shares. But instead of getting out at $9, we're going to get out at $9.90 like it told us to do down here. Now do a little math there for a second. 200 shares, if you lost 10 cents on 200 shares, how much would you be losing? That would be only $20. So that's how we can use leverage but still keep our risk controlled. So we can take a larger position size, multiply it by 5 or 10 or 20, whatever you want, but you would have to also decrease your stop loss amount. Otherwise, you're going to end up risking too much. Now, the beauty of this is that you can still keep that bigger profit. Remember, it told us that we could potentially make $400, but we were risking $200. So by reducing the stop loss, we take care of that additional risk. By putting our stop loss here, we can buy 200 shares and only risk $20 on that trade, but we can still keep that much bigger profit, 400, by keeping our original targets. So if we got out at 12, we have 200 shares times the $2 we made on this trade. We got in at 10, we're getting out at 12. That's a $400 profit. This would be magnified by 10. So that's how the leverage works. I recommend going through this a couple times, maybe writing down on a piece of paper what your original was, where you would have to move your stop loss to, just so you can get the hang of this. If any of this is confusing, watch the video again, and most importantly, just try out some different scenarios. Plug in different numbers, see how it works, and if you run into any trouble, there is little pop-ups everywhere that you can find out more information about what something means. There are also explanations, and at the bottom, you will also find additional things that just tell you what all these things are, how to use them, each one of these metrics, why they're important. So loads of information. Position sizing is very important for successful trading. So each time you are going to take a position, I recommend coming to safetradeBinaryOptions.com, going to the analytics, clicking on position sizing calculator, and running your position through the position sizing calculator so that you just make sure that you're taking the right position for the entry you're taking, the stop loss you have, and the amount you're willing to risk.